Along this video, we continue to read the book, The Cashflow Quadrant by Robert Kiyosaki. And in this one, he's saying, what is your interest rate really? Video number 60. Please join me. Hello, welcome to Take a Step to a Better You. If you are new, my name is Sherifa Nakalema. I'm a business owner here in Virginia, USA. And if you're returning, I appreciate you very much. Thank you. Always like, always share. Leave a comment before you go, especially when you come on a premiere. For the new ones, like I said, I'm Sherifa Nakalema, business owner in Virginia, USA. And on here, I read books looking for business tips. Books like The Cashflow Quadrant. And then I finished recently Rich Dad Poor Dad by Robert Kiyosaki. This one is about the Cashflow Quadrant. But other things I do here, that's Monday, Tuesday, Wednesday. And then on Thursday, I drive around USA, showing you, I call it driving, morning, evening. Sometimes I show around places, or I interview someone on Thursday. On Friday, I'm live on Saturday. Friday is general for everyone, success, anything to lead to a successful life, we discuss. Then Saturday, affiliate marketing, 9:30 a.m. USA Eastern Time. And on Sunday only, I do it later. I do it at 1:30 p.m. USA Eastern Time. Please check the equivalent. In this video, we talk about the Cashflow Quadrant book. It's a continuation, video number 60. But I always have to remind you, what is this book really about? It's about the quadrant. And according to Robert Kiyosaki, he learned this from his rich dad, by the way, in this book. That's when you know about rich dad. That we earn money from 4 quadrants, either one of them or all of them or 3 of them, depends on where you are in life. So on the left, you're either an employee or a self-employed person or a small business owner. On the right, you're a large business owner or an investor. So that's what he's discussing, and he's breaking it down. So this is video number 60, like I said, and the title is, what is your interest rate really? I'm the one naming these titles. I'm the one choosing where to start and end. So this is not about Robert, but that's the one I chose today, where to read today, where we stop. And in 59, which was the previous one, he was saying, what happens if you pay off your mortgage? Is your house an asset then? So that was the question we answered in the previous one. If you want to get to that, you have to go to all of them. I have a playlist. I call it cash flow. I call that the financial freedom. I find it in the links in the description, or in a pinned comment. The top comment is by me, and I put the link taking to all of them, starting from number 1, since I started reading the book, or end screen. When this video ends, end screen will take you to all of them. Then audio is free, the book, for 1 month. Link in description takes you to audible, Amazon Audible. And then the real physical book is also the top link in the description, takes you to the real book like this, Amazon.com. Then you buy. Okay. 60. The reading of 60, where he says, what is your interest rate really? So let's see what he says about that. He's very interesting. So that's the title he has here, subtitle, and says, what is your interest rate really? Rich Dad, Robert is writing, Rich Dad fought and negotiated tough for every single point of interest he paid. He asked me this question: when a banker tells you your interest rate is 8% per annum, is it really? I found out it's not if you learn to read numbers. I found out it's not if you learn to read numbers, which means if they say 8%, it's really not 8%. We are learning a lot from this book. Okay, let's say you buy a house for $100,000. You make a down payment for $20,000 and borrow the remaining $80,000 at 8% interest with a 30-year term from your bank. He's giving an example. In 5 years, you'll pay a total of, he puts an amount there, and interest and only, okay, maybe I need to read these to make sense. In 5 years, you'll pay a total of $35,220 to the bank. 276 for interest, and only what? Only 3,944 for debt reduction. So out of the 30, now I'm the one interpreting this. Out of the 35,220 you paid to the bank, 31,276 is interest. Can you imagine? And you just paid on the debt just 3,944. If you take the loan to term, which is 30 years, you'll have paid 211,323 total principal and interest, less what you originally borrowed, 80,000. The total interest you have paid is 131,323. Oh my God. Did you see that? You borrowed 80,000 and just paid 131,000 in interest? By the way, that 211,323 doesn't include property taxes and insurance of the loan. We're talking about these recently. Funny, 131,323 seems to be a little bit more than 8% of 80,000. Remember, they promised you 8%. It's more like 160% in interest over 30 years. As I said, they are not lying. They're just not telling the whole truth. And if you can't read numbers, you really never know. And if you are happy with your home, with your house, you'll never really care. But of course, the industry knows that in a few years, you are going to want a new house, a bigger house, a smaller house, a vacation house, or a refinance of your mortgage. They know it, and in fact, they count on it. That's actually very sad. Okay, now he has a subtitle, Industry Average. In the banking industry, a 7-year average is used as the life expectancy for a mortgage. That means banks expect the average person to buy a new house or refinance every 7 years. And that means, in this example, they expect to get their original $80,000 back every 7 years, plus $43,000 to 91 in interest. Can you imagine? You pay more than this. Is crazy, actually. I'm the one speaking now. And that's why it's called a mortgage, which comes from the French word mortgage, or agreement until death. The reality is that most people will continue to work hard, pay raises, and buy new houses with new mortgages. On top of that, the government gives a tax break to encourage taxpayers to buy more expensive houses, which means higher property taxes for the government. Every time I watch television, I see commercials where handsome athletes smile and tell you to take all your credit card debt and roll it into a bill consolidation loan. That way, you can pay off those credit cards and carry a new loan at lower interest rate. They tell you why. It's financially intelligent to do this. Now he's putting in the quotes, a bill consolidation loan is a smart move on your part because the government gives you a tax deduction for the interest payments you make on your home mortgage. Viewers thinking they see the light run down to their finance company, refinance their home, pay off their credit cards, and feel intelligent. A few weeks later, they're shopping and see a new dress, a new lawnmower, or realize their kid needs a new bicycle, or they need to take a vacation because they are exhausted. They have excellent credit. They pay their bills. Their little heart goes pitter, 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 patter. And they say to themselves, oh, go on, you deserve it. You can pay it off a little every month. Emotions overpower logic. And the credit card comes out of hiding. As I said, when bankers say your home is an asset, they are not lying. I'm reading the last paragraph. Robert is interesting. Okay, when the government gives you a tax break for being in debt, it is not because they are concerned about your financial future. The government is concerned about its financial future. So when your bank your banker, your accountant, your attorney, and your teachers tell you that your house is an asset, they just fail to say whose asset it is. That's the end of reading of number 60. And my takeaway from this one is I put a note here. I said it was interesting when he said that the government is not concerned about your financial future. And I think, let me share something. For those of you who live in USA, please, you can add a comment about this. Just my observation. You know, in USA, it's very easy to if you qualify to apply for a student loan. So you are in college, they give you a loan to pay for education. But I wondered why they made it easy to get those loans and aid and stuff like that. Do you know their calculation is after you get your, that's me by the way interpreting this, after they know that after college you're going to earn more money and they're going to pay higher taxes. Remember, like Robert tells us? So this government, you think it's your friend, but it's not. Did you see? Now here they're encouraging you to buy a bigger home so you can pay more taxes. They give you deductions, but actually it is for their benefit. So it seems like we can't trust anyone. Even some advisors you can't trust. So my takeaway is that the government, I think, has like another conspiracy thing going on with it, because like even with the education, okay, they help you to go to school, which is good, but you end up paying higher taxes because of the higher education. So maybe it's a win-win, we can say, but people fail to pay their debts. Do you hear that Barack Obama almost became president of America with debt from being a lawyer? That he had a large number. You can go Google it. That's so sad. Those lawyers and those professions that take long to finish, they borrow a lot of money and they're very expensive. Like how much they pay. So can you imagine 200,000 in student loan, and you are like an adult, you are working, but you have that? It's sad. So that's my takeaway. Please put a comment for me. What do you get from what Robert said? The interest, they say it's 8%. It's actually not 8%. It's a lot more. Like when you pay monthly on your mortgage, the big portion goes for interest. They make sure they get their interest every month. That's it. Can we trust them, the bankers? I don't know. Please add a comment for me, like the video. Like I always end them. I said take very good care of yourself. Take very good care of your families. Take very good care of your health. Take a step to a better you. Bye-bye.